Welcome back everyone to another stock review on Russell 2000. Today we have the Credo Technology Group Holding. The ticker is CRDO. So without further ado, let's get right into it. So over here, we can observe the chart of Credo. It's actually very significantly good. So it has experienced one extension pullback, another huge extension. So perhaps waiting for another short pullback and continue to go higher. Perhaps. So without further ado, let's get right into their fundamentals. Over here, we have the revenue for the Credo technology. So over here, we can observe a very predictable and increasing revenue, indicating they have great sales and continuously grow of this company. And as for their net income, it's also in a form of increasing and slightly to become more predictable and showing their profitability for the recent quarters and starts to show profits after the quarters of 2025. So it's actually a good sign showing that the company actually starts to making money already. And as for the free cash flow, it's also expected that since the company is slowly generating cash, the free cash flow will turn positive and also indicating the strength of this company to provide cash profits from their sales, which is continuously showing growth year over year. So over here we'll be understanding what Credo actually do. So it is a semiconductor data infrastructure company that provide high-speed connectivity solutions, especially for data centers, hyperscales, cloud AI operations, and network equipment. So their portfolio includes active electrical cables, links, optical digital signal processor, they have serializer, and so on. So their revenue is mainly from product sales, their hardwares, their cables required for the data centers. They have IP licensing, royalties, support maintenance, engineering services, interest. And as for their strength and weaknesses, strength is actually having AI and cloud infrastructure tailwind. So position in a high-speed connectivity market for the critical for AI data centers and hyperscales. So they also have strong revenue growth as we observe, diversified revenue model. So they earn from the hardware sales, IP licensing, services, maintenance, and so on. And for their weaknesses is that their customer concentration risk. A few hyperscale clients may represent a large portion of revenue. So if one reduces the orders, revenue could take a big hit. And second of all is high valuation. So runs up aggressively with AI booms, but the growth slows and the P ratio could have a sharply correction. So limited profitability history. So despite revenue growth, net income is still inconsistent. But as we observe from our view, right, the net income starts to show positive turnaround as well as starts to in the form of increasing. However, it's just not as predictable as the revenue in terms of long run. So it actually takes more time for us to observe whether or not if the company will be able to continuously generating profits in the long run and also during this AI boom as well. So recently, the company actually starts to earn profits. The financial fundamentals are great. So any reasons and what is the future expectation of this company? So one of them is actually a very massive revenue growth, especially in hardwares, due to the fact that we are actually heading into AI boom. So we also have strong demands in terms of AI infrastructures, high margins. So as for the expectation, it will probably sustain the profitability due to the AI boom, a lot of high demands. Will push more design to win new areas, successfully diversify customers that will reduce volatility and risk. So they're moving from one dominant customer to several. So they are splitting their clients pool in order to reduce the fact that if the higher customer cancel their orders, the other will be able to manage to cover the losses. So for the Credo profit margin, it actually starts to become positive and also showing a great signs, and hopefully this continues in the future. So in their balance sheets, we'll be able to find total current assets is at 800, for total current liability is at 100. So it's a very safe zone with more assets than their liabilities. They will be able to cover their debt situations, and for their net cash is also in a very stable form of more cash than their debts. As for their ratios, let's look at the debt to equity ratios. We have a very significant low, lower than 1 as well as lower than 0.5. And as for their ROE, is also in a very positive form, so higher than 15% right now. And also for the ROIC is increasing form, still making its way to beat the 15%, but also in a very reasonable place as well as very stable. We will be looking at the Credo's economic mode score over here. We obtained an average score of 6. So Credo is sitting at a moderate mode. So it's quite surprising, but the fact that their net income just starts to turn positively, this might be a great position. So after looking at all the information, my take on this company that I will not invest immediately because due to several factors. First of all, is actually at a very high positions whereby it's near the all-time high. If I were to buy, if I were to enter, I would enter near the EMA of 200 or wait until it drops to a certain level of supports, and only then I will consider to invest a little bit. But second of all is that their revenue and net income just started to turn positive, which is a good sign. And what I want to see in the future quarter is that they will be able to maintain this high predictability as well as profitability in the long run. Third of all, which is the final reason, is that the company itself is actually still at a moderate mode. So this might be the fact that, hey, this company just starts to become profitable in the recent quarters. So with the fact that although they are industry in the AI sector, which is the boom in the market right now, so it could be actually taking more future quarters observations before it can start to become a strong mode that will be able to consistently proven with high predictability in terms of providing profits and cash flow. So I guess that is all for today's video. This investment could be a better tool as it can have potential in this coming AI sector boom, which will definitely generate a lot of profits for this company. But before that, we'll be waiting for future quarters to see the results, and only then will we be able to prove this company is a high predictable profitable company and also have a stronger mod in that future time, and only then I'll buy at a cheap price. So if you are interested in this company, you can do your due diligence, your research before you make any decisions in investing in the stock market or this company. So I hope this video helps. If you like this, you can subscribe to the channel, like my videos, and share it to your friends. So I guess that's all for today's video. I will see you guys on the next one. Goodbye.